Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome to another episode of Venture Stories by Village Global. I'm here today with two very special guests, returning fan favorite, Sheel Mohnot, a new network leader at Village Global, and Seth Rosenberg, longtime listener and first-time caller.
Yep.
If I may say so myself, of Greylock. So Seth, we're here to talk about some of the thoughts and presentation that you put together around where you see the big opportunities in fintech today. Why don't we just back up? You have a background at Facebook, Goldman before that. Out of all the areas where you can focus, why did you determine that the opportunity was in fintech? Why spend all your time there?
Yeah. First of all, thanks for having me on. It was when I was first putting together the initial ideas of this, I actually called Erik and Sheel and we had a little brainstorming session. So it's fun to see that it's out in the wild and that we're talking about it here. I mean, a really high level thing to kick it off in terms of why I'm excited about this space is, there's $7 trillion of market cap in financial services in the US. And almost all of the leading companies are still incumbent companies, traditional companies. If you look at most other sectors, Netflix is, depending on the day, larger than Comcast, Universal, Facebook, $500 billion market cap is the largest media company. And you look at every single sector, that's the case. Financial services, for a variety of reasons, regulation, trust, just rails and infrastructure, has just lagged. And so I think now we're in kind of a golden age of just rebuilding the entire financial services industry using software.
And who are these incumbents? And it's not like they're so good, right? Or
they're great. Yeah. They're great depending on who you are, right? If you're, the CEO of a company, in some cases, if you're a venture investor, depending on who you are, you're extremely well served. But there's huge holes, and that's, the entry point for a lot of startups that we've seen.
Yeah. So talk a little bit about some of the big assertions that your deck and presentation make, and what are the opportunities to disrupt them?
Yeah, well, I started with just like a simple definition of what is finance. I was trying to just take a step back to think a little bit more in first principles, not like, what's the best insurtech startup out of the 4 that I've seen this week? It was more, why did the financial services industry even exist? And if you were to rebuild it from the ground up, what would it look like? So in the deck, I came up with this definition, which is just relatively simple, but it has some interesting, threads that you can pull on, which is, infrastructure to exchange resources with unknown people and businesses. And each one of those words is basically, an entire industry in the existing financial services. For example, unknown people. Yeah. You have all of these tools and businesses like FICO and credit scores and actuarial tables to basically solve for the fact that you don't know who you're dealing with, and you have these intermediaries who take large fees. But
so you're saying like any identity system is a fintech company. Is that fair?
I actually like that. I think, I don't know if I was actually thinking that expansively about it, but I think, because I was more thinking about it for this particular use case, but I think that's an interesting point.
I think I like it because I invest in fintech, and I like fintech to be as broad as possible to allow me to invest in as many things as possible. So I think that makes sense. I guess like the other question would be like, if it's infrastructure to exchange resources with unknown people, what about all these other things on the front end? So we talk about infrastructure, but like, what about the front end piece of it, which is like, who's actually interfacing with the customer?
Yeah, that's a great point. And similar to your definition of what is fintech.
Yeah.
You could expand the definition of what is infrastructure, right?
Okay.
Is an install base of iPhones, is the existence of money, is that infrastructure, front end infrastructure in this case. So I understand your point. I think the way I was thinking about it here was, point of sale payment systems, iPhones, credit cards. I think it is all kind of, maybe there's a more general word for it, but the concept is, what are the pipes and systems that are being built so that people can exchange value and exchange goods?
Yeah, makes total sense.
Yeah.
I love it.
And so what is the hottest insurtech startup of the four that you've seen this week? Because Sheel and I just did one. Can't talk about it, but it's dope. So.
Okay, we'll have to talk offline.
Okay, so that's where you started the presentation. What were some of the other sort of major points you were trying to make from it?
Yeah, just to build, just for one more second on the definition, like even the definition of resources, right, is expanding from, and that's when you start to get into things like digital currencies. And then the question of infrastructure, again, like data exchanges, payment rails, things like Plaid, a lot of those have actually enabled this kind of new wave of fintechs. So when you start talking about the why now, why are you interested in this space right now?
Why haven't challenger disruption happened in fintech where it has happened in other industries?
I think there's a bunch of reasons. Like one is if you looked at like who people trusted for the long time, like it was historically you trusted these guys who had the biggest building in their small town and like they were the people that had money. It's also a network effects business, like more so than many of the other incumbents that you talk about. Fintech has historically been a network effects business. So like actually the more bank branches a bank opened in a particular region, the larger the number of deposits per branch were. So like the more they saw that bank, the more they deposited. And that of course takes and of course there's scale benefits. There was a historical flywheel that it really takes a long time to dismantle. And now what we're seeing is a bunch of companies that are actually not banks, but they're doing small pieces of what the banks were doing. And so that's how they've started to go after this huge behemoths.
Yeah, I think like the trust and network effect is super interesting. Like I think a lot of digitally native people or just people in our generation, like I personally trust an app where I feel like I have full control and there's transparent fees and you can pull the levers yourself. I trust putting my money in a place like Wealthfront more than, some person with a suit and tie giving me a call or, with an expensive office that I feel like I'm subsidizing. And so I think just that generational shift in trust is really important.
Seth, one of the businesses you were involved with very early on is Tia. And my understanding was that they were trying to initially create sort of a chat app so that they could own sort of the relationship with the woman over her life cycle for, all of her needs. In fintech, is it similar in that people are trying to own one specific use case and then own the entire customer relationship and everyone's effectively competing to be a bank? Or what is it?
Definitely. Like we said, when you ask like, are the incumbents, strong and it's like, yes, they're strong depending on who you are. And so we saw, the emergence of all of these point solutions, primarily serving the underserved because there's, very low marginal cost to distribute software. So things like, payday loans or things like Chime, where it has certain services that benefit like gig economy workers or others that were previously not well served by banks. It's definitely, I think, let's say the bull case of any one of these companies is that that's their entry point, and then because they have data that they can iterate on, because they're software companies that can just move more quickly than incumbents, they take that wedge of customer acquisition and then start to add on services. I think as investors, one of our challenges is to identify which ones are best positioned to do that, and I talk about that a little bit in the deck.
Let's get into it. What are some of the characteristics of outliers or companies that will own the customer relationship in a durable way and be able to expand from there?
Yeah, I'll kick it off, and I'd love to get Sheel's perspective too. But one framework I laid out was basically just this trade-off between depth of relationship with the customer and frequency. So robo-advisors is a good example of very deep relationship with very low frequency. Yeah. And so, I love robo-advisors. I think it's a great way to invest. But I check it once or twice a year at tax season. Yeah. So their ability to add on services to me is limited to that one time I check it. On the other end of the extreme spectrum, maybe you have a Venmo. I'm using it all the time to, pay my friends after a coffee or after a Bears class or whatever. And,
you don't need to laugh, man. Be proud.
I'm going to my first one tomorrow morning.
Amazing. Yeah. One of us.
But anyway, the point is, just because I'm using Venmo all the time doesn't mean I'm going to get a mortgage from them right away. I don't necessarily have the trust. I don't have, my money stored with them other than the, $50 of float. And so finding the sweet spot, and some of these challenger banks that are starting to get breakout traction may be actually in a good position, because especially ones that have your direct deposit set up, you have a pretty deep relationship with the customer, and they're using it pretty frequently in terms of using the debit card to spend.
Yeah, I think that's true. By the way, very few of their customers have direct deposits set up. I was recently looking at numbers from another company. One of these large neobanks is spending $40 to $50 to acquire a customer, and that ends up being actually $250 to $300 per direct deposit customer. So to actually, like, historically, the numbers for traditional banks have been like they would spend $500 to acquire a customer, and then each service that they had, they would make like $250 LTV off of it, or $300 maybe LTV off it. So they'd be profitable on the second product that the customer used. It's interesting to find out that Chime, these neobanks, are actually not that far different in terms of what it costs to acquire a customer. One of the things that's happening though is like every single consumer fintech app is converging on a similar set of features, whether it's like Wealthfront Betterment, adding savings products. There's in the lending space, there's like Bridget and Digit. They're adding, or Bridget and Dave, Digit on the savings side, Albert, Empower, Stash, Acorns. They're all converging on largely the same set of features that includes investing, lending, savings, and then for some of them, advice. And it'll be interesting to see what happens. Like as many of them are moving into the debit card space recently, like there's only so many that you can have. As a consumer, I might have many of these apps right now, but if one of them wants to be my primary banking account, there's only going to be one that's going to get to my direct deposit. It'll be really interesting to see how this plays out.
And are they all commodities in some sense, or what determines, what's going to be the one that's defensible?
I think like it's really comes down to trust again. Like which one does the consumer love to use? And it's both frequency and depth, depth, like Seth said. And I think, I have my bets, like I've invested in Albert, and they're starting with advice, and their customers send them text messages asking for advice.
Yeah.
They also have a savings product, an investment product, and they're adding a lending product in a couple months. So I like where they're at. I do think that there's a ton of competition in this space, and we're already seeing CACs go through the roof in the past year. So it'll be really interesting to see who can build durable brand where like they're not relying on that Facebook spend to get new customers.
And we'd be remiss if we didn't mention our friend Lindsay Holden's Long Game.
Yeah.
He's trying to gamify savings.
Absolutely. Super interesting company.
So are there any companies that have really figured out distribution hacks, or how should fintech companies be thinking about distribution?
They should be thinking about it all damn day long, because all of these consumer fintech apps, I find that like their first 100,000, 200,000 customers they can get, and free, when I say customers, I mean like free users they can get easily. And a lot of them are like the same people. Like I download every app that comes out, but beyond that, it becomes a struggle and you are competing. In terms of hacks that I've seen people use, it's like there's always some arbitrage in some channel. Right. Like Snapchat seems to be a better channel right now to acquire millennials than Facebook is. Yeah. So I've seen that working for people, but I haven't seen any like amazing solutions, silver bullets that's going to get you your next 100,000 users.
Yeah. One that I saw recently is Step.
That's a good one.
A challenger bank for teens. And they just had like really creative design and just utilized kind of scarcity and kind of recommendations in a great way, where they basically had these like really fun QR codes and really easy ways to share to like get access to the wait list of Step.
Well, to be fair, they were also giving away free money. That always helps.
Exactly.
To teens.
Yeah. And the cool thing about that is like, exactly like, for every person that you got to sign up, you would accumulate this balance. People are accumulating hundreds of dollars of money in quotation marks, because that money only actually converted if the person, fully signed up and deposited and used a card, which, hasn't happened because they haven't launched yet. But I thought they did a really great job of getting that off the ground.
I thought they did a great job as well. And I like CJ. I wonder though, like they have this huge wait list of people who've signed on to get money. Do you think that's an effective use of time before they launch the product? I always wonder about this. I don't actually necessarily have an answer in my head. It's something that companies always ask.
Right. I think part of the answer will be how many of them actually convert into real retained users.
And yeah, I've just never seen it work that well, but it definitely helps with fundraising.
Yeah, which they did quite well.
But another answer to your question is just taking a step back. I kind of, again, in the deck, I kind of outlined like 5 broad categories of opportunities. And I actually think this whole discussion that we're having now around consumer fintech apps is actually just one category. Yeah. And there's pros and cons. We could talk about it all day. Basically, I think the, incumbent analogy is a retail bank, right? So all of these different fintech players entering from different angles with different distribution hacks are all going after the opportunity to be the next Wells Fargo. Right. Yeah. And a few of them are going to win. It's not going to be winner take all. A few of them are going to win. But the other categories that I think are also super interesting is basically, I'll just list them off super quickly and we can dive into any one. One is just the infrastructure layer. And this is more of the specific definition of infrastructure, which is, things like Plaid, data exchanges, things like Stripe, developer tools for payments. And, the incumbent analogy there I use is Visa. 2 is, the full stack consumer, which we just talked about. 3 is, these proprietary data, companies. And you can think of an incumbent being FICO, right? The credit bureaus. We invest
where like Tala or these companies are trying to compete there.
Yeah, absolutely.
Yeah.
Well, I mean, like you guys are in PageAway.
Exactly.
Similar business.
Yeah. PageAway is a great example. We just led the Series B. 4 is, marketplaces, have natural kind of lock-in, and Coinbase, we did their last growth round is a good example of that. Roofstock, another good one. And then lastly is, what I call creation of new asset classes. And that's where a lot of cryptocurrency comes in.
Right.
I'd say these, like the ones that you've referenced here and talk about, are all broadly speaking in the banking space, but actually I think you could use the same framework for any insurance company. So there's an infrastructure layer, there's owning the relationship, there's proprietary data layer, there's a marketplace, creation of new asset class. Actually, maybe that too. So I think this framework holds throughout different spaces within fintech.
Yeah. Yeah, I think that's right.
And do you think there will be bigger companies within a certain segment? Are you do you have a focus within one of those segments, or you say, hey, there'll be companies across that stack? And
I think there'll be companies across the stack, and I'm interested in all of them. I think as it goes with investors at a particular moment in time, you're diving into a particular sector that you're more interested in. So for me, right now, it's the infrastructure piece that I'm particularly interested in, but I'm always looking at everything.
And where within infrastructures, you mentioned Plaid, you mentioned Stripe, what are some things that don't yet exist but should exist, or what's your request for startups for fintech infrastructure?
Yeah, I'm actually searching myself for the right answer to this question, but an example could be a API for lending or a better API for trading. A lot of people are built on top of Apex. Robinhood was until last year, and I think that Apex has not been a very good clearing product, and I think there's opportunity to build a new one. But otherwise, a lot of the stuff has been touched. It just, Synapse is there on the API for all banking stuff, or a lot of the banking stuff. There could be an API built on top of a broker-dealer. There's a bunch of different spaces to go to.
Yeah. I also think insurance, there's a ton of, like you said, infrastructure plays. What's the Affirm for insurance?
Absolutely. Yeah. I mean, I guess Assurion existed before Affirm, mm-hmm. and it is some element of that.
Yes.
But yeah, I think a modern one for sure.
Yeah. Or, right now you have all of these, basically at a very high level, the insurance business has carriers and, front-end brokers. And many of the front-end brokers are just entrepreneurs, have a retail brick and mortar presence. How could you build a system that enables digital entrepreneurs, digital brokers, or, so that you have distributed distribution in a way where anyone can spin up, and price a special, specific product that has specific distribution. Yeah. So I think unlocking, entrepreneurship around distribution, pricing, and creation of new products and insurance is really interesting.
How should we think about, why is one of the biggest neobanks in Brazil? And how should we think about, emerging fintech? Is it sort of the Rocket Internet model? We invest in a company that's doing Affirm for Latin America, it's crushing it. Take what's worked here and just do it elsewhere. Or how should we think about international?
I think take what worked here and do it international is not the right move, actually, because there's so many localized things that make a lot of sense in a particular market. For example, this company that we just invested in, they do parametric insurance in Mexico. And one of the things that really excites me about it is when I go to Mexico City, I ask everybody, like, what's top of mind? And the number one thing that people say it's top of mind is earthquakes. They're really worried about the next earthquake. Like, they had a really bad one almost 2 years ago, and it's literally top of mind for everyone I talk to. Yeah. Like, everybody's worried about it. And so this company, if there's an earthquake, like, you pay a certain amount per month, and then if there's an earthquake, no matter what, like, they don't have to come to your house, nothing. They'll just pay you out if there's an earthquake. So it's parametric, which means there's a set of parameters that if they meet the parameters, you get paid. So that's something that, like, we have a very established market for insurance risk in the US, and it wouldn't necessarily make sense to do that business here, but it makes a lot of sense in Mexico.
Totally. How do you think about emerging fintech?
Yeah, so it's very topical because we just invested in PayJoy in the Series B. And it's interesting because you really need to change your mindset. Like you said, it's not like necessarily take what works here and do it there. There's some just basic building blocks that are missing. And PayJoy is a great example where, 95% of people in emerging markets don't have, any type of credit file. And so PayJoy's initial use case is how do you actually use the smartphone as collateral so that anyone can get a small loan, even if you don't have a credit card, by changing the incentive and trust system. And it's really clever the way that they do it through software. So you can just go into a store. You don't have a credit score. You don't necessarily have $150 American on hand. So rather than being forced to buy a feature phone and being kind of left out of the modern economy, PayJoy says, hey, if you install our app, then you can kind of pay over time. And if you don't pay in a given month, then the phone becomes unusable. And so it creates an incentive and trust system, in the absence of a credit score.
Yeah.
The other thing, sort of unrelated note, is in the US, we have very strict guidelines on what you can use to underwrite a loan. And the nice thing is if you're a lender, you're like, man, if I had access to all this other data, if I could underwrite based on other stuff, what would I do? And that's the opportunity for, like, Branch and Tala internationally, is they can underwrite on all sorts of stuff that we can't here. And like, if you could build a machine learning model on all the data you have on an individual, like, what would happen? Could you underwrite better? You probably yes, but you can't do that here.
Yeah. And that goes back to the kind of, exchanging resources with unknown people. Yeah. More and more, we're moving towards a system where we can actually exchange resources with known people at scale. Yeah. So it's kind of back to the, original community where you knew everyone, and therefore there were pretty low, friction and trust costs because you just, and that was lost, but it is coming back through software.
One thing you've written about or thought about, Seth, is why won't the Asia model apply to what we do here?
Sure. Let's start with just the WeChat model.
Yeah.
A fully integrated consumer app that does everything from lending to savings.
Yeah.
One cool, just quick personal story is in 2014 when I was a product manager for Facebook Messenger, and we had just separated Messenger into its own app. Yeah. We did a trip to Asia. We went and saw, South Korea, Singapore, and we went to visit the headquarters of WeChat. And talking to one of the product managers at WeChat, and they said, hey, we actually just launched this savings account where, we already have payments in WeChat, and now you can park some of your money at like a 7% interest rate in our savings account, which is normal for China around that rate. And I said, oh, cool. Like, what's your AUM? And, and yeah, it launched 2 months ago. I was thinking maybe like a couple billion. The AUM was $100 billion at the time.
It's so insane. The scale of China is just insane. But I think, like, to your point, WeChat, like, you can do everything in one app. And for whatever reason, like, Americans have never preferred that model. Like, if you look at like the Google homepage, it was like super simple. There's one thing. If you look at the Baidu homepage, there's like a million different things you can do. And this has always been the case. And I think that, like, this is something I just thought of right now. So I don't know if this is actually true, but like, if you think of like countries where that is true, where like the main place people go on the internet is like, has so many different lines of different things you can do. I bet that works, where like Grab in Southeast Asia also is trying to be like the universal app. Grab is a ride hailing app. Like, you might call it the Uber of Southeast Asia, but actually it's much more than that because you can pay in it. I think they're closer to WeChat, or they're as close to WeChat as they are to Uber here. And it's like they all want to be the universal app that you use for so many things, so many parts of your life. They want you to open it like 20 times a day.
Yeah, I think to build on that, the other dynamic is just the classic kind of like leapfrogging of technology, where when Facebook scaled in the West, for the most part, a lot of people were pretty well served by their bank. So if Facebook just launched some kind of janky savings or deposit, not only did we have tighter regulations, but that's just not something that would just be adopted immediately. Whereas you've just in the last, 10 years just had this amazing growth in economies like China. And when people are kind of entering the economy or the middle class for the first time and using WeChat, they might not actually have a bank already. And so it's pretty easy for them to just start consolidating services. Plus the structure of the economy is a little bit more centralized.
Yeah. I mean, it makes sense. Like here, we talk about credit cards not being that difficult to use. And like, so if you never had a credit card and could pay with your phone, you probably would do that. But if you have a credit card, it's a lot easier. It's not that much better.
Yeah. The listeners have been dying to know, Seth, what is the definitive Seth Rosenberg hot take on Libra? Its impact, why is it game changing or not?
The hot take. First of all, it was a very surreal moment, having worked with the Messenger team and just kind of, all three of us, some of our friends are working on that project.
Yeah, for sure.
And it's just really cool to see the kind of impact that a product launch like that can have.
Shout out Morgan Beller.
Yeah. Morgan.
But yeah, I mean, one of the things that really resonated with me is just, David Marcus's opening letter of Libra, which just said, if you walk the streets of San Francisco or New York, the tech and finance hubs of America and in some cases the world, and you ask a random person, how do I send $10 to Canada? Most people wouldn't know wouldn't know the answer. Yep. And I'm Canadian, so I actually do know the answer. I'm not going to tell you, but,
Secret.
But I mean, it's just solving a very practical problem. Even if you just focus on remittance payments or international payments, they have the install base and, it's one of many kind of technical or product solutions, but, it's one that I think will work. And with the install base, I think I'm really optimistic about that one use case. Yeah.
What's the legacy? What will Libra have accomplished?
I hope, like, for me personally, selfishly, I guess, like, my hope is that it gets to be a infrastructure layer in sort of like in your analysis, like, it's an infrastructure for a financial system. And then Facebook also kind of may own the full stack customer relationship. They may not. There may be other ways to access Libra, but definitely cross-border payments is a huge problem. And like, we don't think about it a lot as Americans because most Americans like don't even travel that much. They don't have friends elsewhere. In many other markets, like Europe, Africa, like there's a lot of cross-border pollination. And that's why like TransferWise started in London. I think there's a huge opportunity to impact a lot of people's lives. And the remittance market in particular is huge.
Yeah. I mean, I think it's fun to, make crazy statements of what it's going to be in 10 years. I think, in classic form, people are potentially overreacting a little bit into like everyone here knows how hard it is to build a product and get people to adopt it just because Facebook, trust me, I worked on this for 4 years. Just because Facebook has billions of users doesn't mean everything you build, people are going to use. That being said, I think we very much take for granted the fact that we have a stable financial system and a stable way to pay each other and save your money. If you go to countries that are less stable politically, with hyperinflation, you can see governments basically currently owning a tool to wipe out the population's wealth through printing money. And to the extent that, Libra plays a part in democratizing and distributing an alternative of people being able to participate in the financial services system without relying on a single thread.
But I think that also is the challenge, right? Like it's a threat. It's a threat to the government. So regulation is going to be a real challenge. And I kind of, in this market, in this day, I wish it wasn't so heavily Facebook branded for that, because in the West, we have this negative, or a lot of people have negative reaction to Facebook.
Yeah. So we've just been talking about Facebook. Most of your deck, Seth, has, mostly consumer fintech brands, but what about Amazon, Uber, some of these other, Google, Apple, some of these other major incumbents?
First of all, I would say like Amazon and Uber just have like amazing, ambitious roadmaps that are independent of building, full stack financial services. Many of them can, potentially take off something that's like really well suited to their use case. Like in this case, peer-to-peer international payments for Facebook, or in Amazon's case, maybe a universal login for payments and shipping. But I don't think that's a primary threat for, some of the really exciting fintech startups to scale.
I don't think of it as a threat, but I think of it as an opportunity as well. Like, I think I read that Lyft and Uber opened 30% of new bank accounts in America last year because drivers need that. So there's a huge opportunity for them, and also for fintech companies to serve them and use them as a distribution channel. Like, I definitely do worry about, like, if Amazon, like, I think to your point, Seth, like, if they were really focused on fintech disruption, there's a lot they could do, but I think they have a lot of other challenges in their hands.
Yeah. The deck seems to imply that the industry structure won't really change as a result of some of these disruptions that we're talking about. Should we expect financial services to look the same after the shift, just run on better software, or will the value chain and delivery methods fundamentally change?
Yeah, one way to think of it is, first of all, you have huge value creation from shifting from incumbents, the $7 trillion to startups. And then I think you have huge fee compression, but economy expansion, right? So fintech is just kind of like the grease for the economy. And right now it has been stuck in a place where the financial services industry is just taking too high of a middleman fee because it's so consolidated and regulated, and because there's, so much counterparty risk that they need to compensate for. In a world of software with, complete information on every individual, as well as, zero marginal cost to serve, I think you're going to have ideally a far lower percentage of the overall economy, but the economy, it will have been an accelerator for the economy in general.
Yeah, I agree. And all that adds up to just life being better for consumers, which is exciting. Seth won't talk about it himself, probably give himself praise, but I want to say, like, as a fintech investor who's been doing this for many years, I really loved Seth's presentation. So Google First Principles of Investing in Fintech. It's super good. You should all read it. Like, each slide has so much dense content. It's great.
Totally. And Seth is also just a great person. So definitely pitch him your startup. Totally.
So much flattery.
I'll take my
thanks for having
payment
me,
later.
Yeah. And it's returned.
My guests have been Seth Rosenberg, Sheel Mohnot. Thank you so much for coming on the podcast.
Thanks for having us.
Cheers.
If you're an early stage entrepreneur, we'd love to hear from you. Please hit us up at villageglobal.vc/network catalyst.